The markets, how did they do this year? Well, I guess the short answer is they did extremely well. It was one of the first years that I can remember that the actual Toronto stock market, or TSX, outperformed the New York markets, the US markets, whether it was the NASDAQ, the Dow, or the S&P 500. And let's put up our first chart so viewers can see what I'm referring to. And you can see how well the North American markets performed. There you have them. Dow Jones came in around 13% gains for the year. S&P 500 just over 16% gain. The NASDAQ over 20% gain. Another 20 plus year of growth. This is the third year in a row for all these major indices to do well. And there you have it, the Toronto Stock Exchange up over 31%. We talk about this all the time. Why has the TSX outperformed this past year? And you don't have to look much farther than the sector or topic of gold or materials or silver as well. Silver more than doubled the price this past year. Gold was up well over 70%. You compare that to other areas or asset classes, they did not do as well. Even the tech stocks didn't behave as well as the materials sector. And that's why you saw the TSX, which is made up of 15 to 20% material stocks, of which most of that are gold stocks. That is the main reason for the outperformance. You also had a really good year from Canadian bank stocks. Most of the Canadian banks ended the year, I should say large cap banks, so your big 5, 6 if you add national banks, so your CIBC, Bank of Montreal, Scotia, TD, and Royal, and then National Bank. They had phenomenal years. They ended the year off at all-time highs with respect to pricing, and that in the first couple of days of this year has not slowed down. The banks have had a great run, even in the first few trading days, both in Canada and the US. Our next chart we can show will give us a bit of a glimpse as to how the global indices, global markets fared as compared to the Americas. And even though Toronto Stock Exchange did well, if you look at Americas versus the world versus Asia Pacific Rim versus Europe, you can see that the Americas underperformed many of the other areas around the world. According to this chart, the best performer was Europe, up over 32%. So even better than the Toronto Stock Exchange. And we know that, or looking back now, we know that the European markets really outperformed early on. As we said probably on the show a few times, President Trump with his tariffs tried to make America greater again. And in reality, his tariff policy actually made Europe great again, and they outperformed by quite a bit. And it took the Americas the last, let's say, a couple of quarters, or maybe since the summer, between summer and maybe November, so 6 months between June and November, or 5 months, I should say, to play catch up to the rest of the world. So you can see how well the markets around the world had done. Our next chart is one that we've seen many times. Let's put it up. It is the US stock market powered through a roller coaster year. And it's interesting, if I show you a chart of tech stocks or the NASDAQ or many other individual stocks charts, it would look very similar. A very significant downward, downward spiral or blip down in April, followed by a dramatic increase to the end of the year. And that's when, obviously back last April, is when the tariffs were announced by President Trump, and the markets took it really hard back then. But as you can see, it climbed this wall of worry. So there you have it, Trump tariffs in and around April, tariff pause, bombing of Iran. That is when the United States and Israel started their, campaign bombing of Iran. And we also saw, in October, cryptocurrency, Bitcoin went from about 120, 125,000 US dollars per Bitcoin down to as low as $80,000, lost about a third of its value. Well, the market seemed to shrug that off as well. So a very, very good year, even though we had some crisis that hit throughout the year. Now, what do we think going forward? Well, the markets, as we said earlier on, the S&P up just over 16%. If I had to put on my crystal ball hat or look forward, I think many investors are thinking that returns will be positive, but just not as good as some of the returns that we saw in individual stocks as well as the markets this past year. So more normalized returns. What is normal? Well, since they've been keeping track since World War II, about 80 years ago, more normalized returns are for the US S&P 500, somewhere around 10%, plus or minus a little bit. The Toronto stock market is probably 7-8%. That's the expectation. That has been the average since they've been keeping track. And as you can see over the last few years, especially last year as well, that the indices made a whole lot more. Let's go to our next chart. Here you have AI-linked stocks. They led the S&P 500. And as you can see there, no Mag 7 stocks. Interesting enough, not even NVIDIA, SanDisk, Western Digital. These are data storage companies. So related to the AI investment, obviously you need to store data somewhere for obviously individuals to access it through ChatGPT or Anthropic or Gemini or whatever platform you're using. So these names benefited from that. Micron is a memory chip company producer. We need memory chips as well. Seagate, another data storage. Robinhood, which is the online platform to trade pretty much everything these days, stocks or even getting involved in sports and sports betting. Warner Brothers, that's an interesting one you probably wouldn't expect to see. And the reason why they're there is because right now there is a big negotiation between Paramount and Netflix and Warner Brothers Discovery to acquire Warner Brothers. And the big fight is on in the US for that. And that has driven up, obviously, the price of Warner Brothers stock. Newmont Mining is your gold, and Palantir, another AI investment or AI company. As I said here, one of the things you'll notice, no Mag 7 stocks. So let's move to the Mag 7 stocks and let's find out how they did this past year. There you have it. Who led? Alphabet led, up 66%. NVIDIA, second, up 40%. And then you have a few names that were up slightly. Microsoft, Meta, formerly Facebook, Tesla. And then you have single-digit growth from Apple and Amazon. And coincidentally, I've heard a lot of individuals starting to talk about Amazon as an outperformer for 2026. So what tends to happen? Last year's laggards end up being this year's winners. It's that contrarian style of investing, and that I talk about all the time, and what I use as part of my approach to making recommendations for investors. Let's go to our next chart here. This is a chart for PE ratio. And this clearly shows that we left 2025 at a high point for PE. It's hard to see on this chart, but right now, forward PE is probably around 22 times. You can see there that the average, 10-year average is about 18 times. Long-term average, somewhere around 16 times, actually 19 times, 10-year average. And right now we're sitting at 22, almost 22 and a half. So are stocks expensive? Yes, they are expensive as a whole, but make no mistake about it. There are many bargains within the indices that I think can be looked at depending on the type of investor you are, the goals that you have for your money. So don't just think because I tell you that overall the market's a little bit on the pricey side that you should not be investing today. There are many, many names that I think are fairly cheap that I've been recommending to investors. Let's go to our next chart, and the title is quite interesting. It's called All That Glitters, and it talks about precious metals like silver, platinum, palladium, and gold have surged through this year, along with, coincidentally, European defense stocks or the European defense sector stocks, and that probably has something to do with the United States telling the Europeans that they need to ante up more money to protect themselves. Obviously, the Russia-Ukraine situation was a catalyst, I'm sure, for more defense spending. And who reaps the rewards of that? Well, it's the European defense stocks, as well as American, U.S. defense stocks. They did well as well. I know it's difficult to see the names along the side, but the top bar is silver, as I mentioned, more than doubled, 160% higher than platinum, then palladium. Then you have your US defense stocks, and then gold coming in just under. I said originally over 70%. This chart says just under 70%. And an interesting year. Again, some of the topics near the top are not ones that you may have anticipated happening. Mag 7 tech names, Mag 7 up 22%, somewhere in the middle of that chart. So interesting to look back and see how 2025 performed, put some numbers on some things. We do it all the time here, Allan Small Financial Group, always looking back to see what we can do going forward. We know history is the biggest and best indicator of how market will perform going forward, but obviously there are no guarantees. And so I guess the main takeaway is it was a year for material stocks, it was a year for materials, and that led the TSX higher. If you compare the Americas to many other places around the world, it actually underperformed. And it was a resilient year for the market in the US. It rebounded from a low of almost 20% in the springtime to be higher by just over 16% by the end of the year. So all in all, another great year for individual investors.